Hey guys, what's going on? This is TerrenceRe. Got another stock market update for you. This video, we're going to be going over what to look at for the week. I'm going over price targets. I'm going to talk about certain stocks, and I'm talking about targets that I have for these stocks and why I have these targets. And I'm even going to go over like potential trades like that you could possibly use um, in different scenarios to play out either way. Let's get right to it. Uh, so we've all been paying attention to the news, and we've seen the escalation geopolitically with the United States, between the United States, China, Russia, and then you have obviously we got the war with Russia and Ukraine. So, and you may be tuning in saying, well, what does that have to do with the stock market, or why, you know, I'm not getting political at all. I'm just saying that the ratcheting up of these situations, we can see them in the volatility of the market. Now, the first thing we're going to take a look at on this Sunday is the VIX, right? The VIX measures the volatility of the SPX. So the VIX measures the volatility of the SPX, which is the options market for the S&P 500. You can't trade stock on the SPX, just only options. However, you can trade stock on the SPY, which is the ETF. Now, I'm going to go over this setup in the VIX that I spotted on Friday. We got a low, we got a high, and we got a low. Now, you guys know automatically once I get a higher low or or the reverse. So if we was looking at it like right here, I got a high and then I got a lower high, but here I got a low and then I got a higher low. So it took this out. I automatically put my fibs on. Generally, when you get that pullback to the 764, or some people will use the 786, and then you can see the market jumped up. It reacted from that level. We got a big green candle, took out this high. So now we got a high with a higher high. Excuse me. The only thing I'm looking for right now is a flag pattern. I need to take this high out. If the VIX, this was Friday, the VIX kind of cooled off as the day went on. It opened up higher and then pulled back. That's why you got kind of like like an inverted hammer, right? On this particular day. So I'm looking for the VIX either on Monday or Tuesday to take this high out. Now you say, why is that important? Because that would mean that volatility is expanding. Volatility has already began to expand over the last 2 weeks. Now, if we get a breakout here, that means we're getting a breakout to the upside on the VIX. That means that at that point, me personally, I want to be long volatility. And being long volatility would mean we can actually, let's model a trade in the VIX. I get kind of excited when I see stuff like that on the charts, right? That makes trading extremely easy for me. Now, something you can do, I promise you probably won't see this a whole lot on the internet, people talking about trading the VIX. But you can trade the VIX, especially when you get things like that. Me personally, if I get that move, I probably am coming out 51 days, and you got something like you can do. Now the VIX settles to cash. There's no stock, so you don't have to worry about assignment, right? It will just settle to cash. You could do something like sell the 32 delta, which is the 21 strike, maybe a $5 wide by the 16 strike. So that therefore you collecting 140 in premium. Or you could do something like you could just sell it naked and take that off, right? So your max loss is you see that max loss and you're probably looking at it like, man, that's a lot. However, you got 51 days on it. So you could sell puts, or you could get something, come out here and maybe do something that I may do this live, if I get that breakout here, something like a hedge, right? Let's just say you wanted to come out here and you think that at some point, now this is going to be crazy. If I get this break right here or this high, that means, in my opinion, something is going to happen in the market. The market is factoring in risk. The risk is already being factored into the market. Black swans generally happen like when you don't see it. And like COVID was like a black swan. COVID had not been factored into the market. Like it was not like when that happened, it happened so fast. This right here is a little bit different because we're seeing vol creep up. And if it takes out this high, I'm telling you, we're looking at something like, before it's all said and done, like a 40 something VIX. And that means that you may be able to come out here and buy some, maybe buy some calls out here on the VIX, or buying a call in the VIX will be the equivalent to buying a put in the SPX, right? So, or buy call spreads, maybe come out here and do something like, I would say, maybe buy the 22, sell the 26. And right now it's showing you're only paying 110 for this particular spread, but the max profit is 290. So there are a lot of different things you can do. And I'm just showing different types of trades. If you don't want to mess around with complex options or spreads, you could just come out here and just buy the call right there, right? Which is, I may do something like that. I will, if I do that type of trade, I will put it out in the community so you guys can see what I do. I'm just modeling different things and show you in examples. This week is all about the VIX. You want to be watching the VIX this week, trying to see what's going on. The VIX is going to tell you everything. You don't get that break of this high and the VIX melts down a little bit like that, then you know that volatility is subsiding, is contracting, which means options are getting cheaper. And that would be a neutral to bullish sign. Now, let's take a look at these. I've been on Netflix and I've been on Caterpillar and the IWM. Caterpillar is another one I got levels on. It is on the stochastic oversold, right? But the MACD just crossed over. So what that's telling me, possibly Monday or Tuesday, maybe we'll get a little sideways action just so it can satisfy this. And then probably Wednesday, it continues down. I do have my next level. It already, you can see it hit the 618 and you can see it wick there and held support there for 2 days. Let's go to the hourly chart, and I want you guys to see for those 2 days how that level held. You see, you got here, gap back up, gap back here, gap back, went back up, gapped here, and came back and tested it again. This Fibonacci support level held. The next one is down here around 228, right? So that will be my level for the week. Now, right, it closed at 236. So 228, let's go look at the weekly expected move, right? Let's go look. What is the weekly expected move? 541. So that will put you right around what? 230, 231. So it's right around that area. That would be support for the week. So it could drift around, but all in all, I will say within the next 2 weeks, 2 to 3 weeks, I do expect Caterpillar to go down here and touch this 228 and possibly contest this level down here at 215. A put at 215. I'm gonna look at this on. I am gonna take a look at this on Monday. So maybe 420 if I decided to buy the put right there at the 220 strike. Looking at making In the money would make it 11.05. So looking to make, that's almost a 2-to-1 bet, 2 to 3-to-1 bet. Risk 1 to make 3. Let's go look at Netflix. Now these levels, I didn't just draw these. If you look at the previous videos, these levels been on the screen. I made money on this trade right here. I called this trade out when Netflix was up here. This Fibonacci level was right. It hit the 618, held, hit the 100 level, hit the 1618. Now at this point, all bets are off because you've already got the main levels. Now, with it going down there so fast, I do think the next level of 290 is in play right here. I do think 290 is in play. However, that's a lower probability trade. So what I would like to see Netflix do is pull back up into here, and then get short again. Like there's for me, I don't want to be bullish in anything. I'm not bullish on anything. The only thing I'm bullish on is volatility. I'm bullish on anything that has to do with the volatility of a product. Look at the yields. I've been talking about for the last 2 weeks. You don't need to look at in my opinion, I could care less about the fundamentals of the company. The fundamentals of the company, and Tesla has never had bad fundamentals. So based on fundamentals, it should have never went down. But what you do have is the 2-year yield breaking out to the top. Look at this line that I drew. I drew this line I've been on this since it was back here. It gapped up. I drew this line and said it's coming for this price level. Now it has hit this level. Now let's go look at it. This is a year high. Hell, let's go out 3 years. I don't know. Let's look at a weekly. I don't know. Let's look at a 5-year. I don't even know if it's gonna go back that far. So we can look at the past year and see where it's at. Look at this, guys. This is telling you, I've been telling you that watch the bonds and watch the 2-year yield. It's going to tell you where the market's going. Yields are going up. So as long as this 2-year yield is going up, you can stay bearish. The bonds are crashing. So now at some point, no market goes completely straight up and straight down. So I do expect it to get some kind of pullback right here. So if we get a pullback here, let's go look at the 2-year on the bonds. Let's look at the 10-year. Yeah, look at that setup. Beautiful Gartley pattern. We got it down here at the 2618. So it's holding. So we may get this week a little relief, right? You might see a little pullback in the bonds. So if you get a pullback in the bonds, you'll get a pullback on the 2-year yield. So we could see this week the market kind of go sideways and chop, but that's just it's kind of like a rubber band. The rubber band is popped here, so it's just coiling back up. So, like I said, this week I will watch the VIX. Just watch the VIX. The VIX gonna tell you what's going on. If this VIX comes up here and takes this high out, I guarantee you we get bad news in the world. It's gonna be tracking that news. Like if we get some type of saber rattling between the United States and China, you'll start seeing this VIX creep up. It's factoring in it's pricing in the potential of war. You can see it in the volatility of the market. Let's see. There's one more stock, the IWM. I'm giving you I'm talking price targets. I ain't talking about IWM. They already pulled up. These are on here that I've been talking about for the past few weeks. I am short the IWM right now. I'm currently in this one. I own the put. I got a few trades on it here. I sold a call spread here to help finance the buying of this put that I bought here. So I own this put right here at the 30 delta, right at 179, this 179 strike. And as you can see, that's my last level down here. So I got a low, pull back, throw my fibs on. Now we target hunting. So this particular trade, I didn't put this trade out in the community because the buying of the put is a low probability trade. But it's one that I want to take a shot at, and I'm basically trying to make double the money. So I said I'll take that shot. I got 54 days. Probability of touching this strike is 63%, right? And you can see it's heavy volume around these strikes. So I ain't the only one trading right here. This volume was on Friday by itself. So Friday by itself, someone came in here and traded 45,000 contracts at 180. You got another 1,500 contracts at 179. You got another 33,000 contracts at 178. Who's buying all of these puts? They're not selling these puts. I doubt very seriously that someone is selling puts right here. It's possible because I don't know exactly what's being done right here, but I doubt that because I wouldn't sell a put right here with the market being where it is. So why would someone else? That doesn't mean someone else wouldn't do it, right? I just look at what I would do. I'm trying to figure out. It's a lot of action right here. It's a lot of action. This was on one day. They did this on Friday. This is volume. Volume resets every day. Now, open interest will be counting what's already on the underline leading up to that day. So total is 74,000 contracts at 180. So people are trading this area, right? And some people will tell you that, hey, that doesn't mean that that the market's gonna go there. It's a lot of it's a lot of speculation going on at these levels. Why? And these levels coincide with Fibonacci levels. So either way, even if you don't, that is, it's gonna be some support right there. If they're selling it, I will look for a bounce right here. So either way, like I said, I'm long. I got a long put here, and I got a short call spread up here. So I'm super bearish in the IWM. So like I said, those are the things to watch. We're gonna watch the VIX this week. We're gonna watch Caterpillar this week. We're gonna watch Netflix this week. We're gonna watch IWM this week. Bonds and yields. I'll be looking. That's what I'll be playing this week in different types of trades. Hey guys, if you got anything out of this video, hit the like button, hit the subscribe button, and go ahead and join the channel. Because then, like, to people who join, I actually show like when I'm gonna do it. Like, I'm in this trade now, so but I would have, like, when I do these trades, I post them live in the chat. If it's something in the community chat, if it's something that I won't post like a risky trade because I don't want nobody. Anything that you see me do, you need to make sure that you understand if you try to do it yourself, what you're doing, right? I just like to have transparency with the members of of my channel. So yeah, I'm showing you, hey, I ain't just coming on here yapping. There is no paper trading on TastyWorks. So you putting the trade in TastyWorks, I'm actually trading, and I'm showing you charts, showing you option chains, modeling trades, and I ain't out here, just blowing smoke like I see a lot. But that's neither here nor there. But hey guys, I'm gonna be out. Look for me to look for a video tomorrow. We're gonna see how this market open up. Watch the futures market today. Futures market gonna open up at 6. I think it's 6 or 5, either way. But depending on where you at, what coast you on. But the reason why I'll watch the futures market overnight, because it'll show you how the market's gonna open tomorrow Well, at least you'll be able to see like what happened overnight, and you'll have like some type of view of whether you're gonna get a gap tomorrow, gap up or gap down. You can look at the futures market, look at the S&P 500 futures, and you can watch the VIX futures as well. Bonds will be rocking, so you'll be able to see what the market's gonna give you the next day. And with that, guys, I'm gonna be out. Peace.